The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Tiger Technicians Hour, Monday through Friday, 11 o'clock till noon Eastern Time. 877-927-6648 is the number to call. This is Friday the 16th, and I'm going to try to make this a kind of show that it can also be archived. Not only is it archived in channel, 11 o'clock, channel 11, but I will see to it that we can also use it next week, because I'm going to give you the context, the bigger context that I'm looking at, the reasons why I'm making decisions, why for subscribers we are in our positions, quite heavily short actually, more than we've been in. I can't even remember when the last time was, and this has been going on for a couple of weeks, but especially the last week we've been going to the short side. Most importantly, I can give the reasons why based on the Chapman wave methodology, what we're using, what techniques we're using, etc. And even more important than that, why the close today, Friday at 4 o'clock, is going to be quite important if certain things happen. So let's go to the numbers right now. At least the Dow is up 15 at 15,127 after a really severe decline yesterday. And that was all across the board. Of course, gold was moving very nicely as well to the upside. We'll look at that in a moment. We've got the S&P up about, at this point, it's up 1.30 at 1662, really struggling after the kind of day we had yesterday. What I said to subscribers in my opening call, that's my very comprehensive daily service, where we look at everything based on the Chapman wave methodology and the peaks and troughs that we count, etc., and where we get sell signals to sell modes and why we're going to the sell mode and why we've got a buy signal, or why the buy signal can be upgraded to a buy mode. There's a big difference. Buy mode means the implication is that it should go to at least whatever we're tracking should go to at least the peak D. Sell mode doesn't say that you have to go to a trough D. It just says that you have got a sell signal going on, and that although you're counting the troughs to the downside, we use the pattern, the chart pattern and the technicals a lot more than just the simplicity of going to a peak D on the upside. So while we're looking at this, we've got the comp index up 13 at 36.19. You've got gold right now up 12. Gold is at this point up 5 at 13.66. Silver's up 15 cents at 23. Now this is interesting. You've got bonds down a half a point. Copper's got a nice little move. It's just been bouncing 3 pennies up, 3 pennies down, but it's in this trading range, holding okay. And that's as far as we're concerned, that's a good sign, because we actually hold a copper stock which has done fabulously, absolutely fabulously percentage-wise in our portfolio. So we got the dollar is up 14 cents. Now, this is going to be very important. So let me go through these things. Right now, you're looking at the E-minis. E-minis gave S&P E-minis September contract gave a sell signal. The day of the 6th of August, because on the 5th it hit 1705 and made a peak D the next day. So it's pulling back very sharply. That was also the day that we, right at the opening, we went short the S&P through one of the ETFs. And so we remain in that position. Now it's gone to a leg C, and it's still a leg C because today it went to a lower low than the 1654.25 low of yesterday. Today it went to 1653.75, just a little bit lower, but lower nevertheless. The 120-minute chart shows beautiful left side, right side, break to the downside, went to a trough E, and it hasn't really had any legs. And what I said to subscribers this morning, there are a number of situations that we're looking at, but the one that would fit the best would be if there was a doji type close, a little bit low, a nice rally attempt that fails, and by the end of the day it comes back to close pretty much even. The intraday spike would be what? If you had to buy calls, anything for those of you playing White Lightning, let's say on the diamonds or something like that, you'd be wanting to get out of them on the rally, just scale out of them if there is a rally. I wouldn't get heavily into anything right now. My thinking here is that the premium of the puts and the calls are just going to shrink throughout the day. All right, so that's it. Now let's look at this. What would happen is that bar in the S&P minis of the 10th of July opened at 1647 and closed at 1648.50. To me, that is a target. The 1647s are going to give a lot of information. So now let me get rid of this and we can start looking at the bigger picture. In the big picture, what is very, very important, if I look at the Dow, INDU, there are just so many aspects of what's going on right now that tell me I have to wait for the close today. But if the close is anywhere around here in the Dow, I've gone from a sell signal to a sell mode already in the daily chart of the Dow. Look at the MACD and stochastic. The MACD is still expanding. Stochastic is down at the 12% area, and I've been saying I suspect we're going to go to the 12s and even into the single digits. That's my anticipation. Then there'll be a real nice bounce, but I think this is something a lot more serious, and I'll explain why it could be a lot more serious. Because the weekly chart, anywhere around here on a closing basis, would say that there's a much better chance that this is a peak D, that is going to go lower and probably test that pattern that I call the falling X pattern, right? Falling X, the falling X pattern, and test the low at some point round about 14,900 to 14,020. That line is the line that's going to be very important, and it becomes a target line. That, in the big picture, says, okay, that's just it's a mere blip compared to where we've been, but we want to go one step at a time. The other step would say that a close anywhere around this area, based on the daily action, moving over to the weekly with the failing technicals. Look at the MACD turning down. The MACD is much stronger than the stochastic because it's a longer look-back period. But the stochastic has that torque that can allow for sudden spikes. So most importantly, what I'm looking at here, what's the area, Angie asked? The area is between 14,820, well, it depends where, of course, 14,820 to about 14,840. That whole area, that's going to be really key. But regardless, if we close around here or lower today, I have no doubts that I'm going to by the beginning of next week, I'm going to be putting a down arrow, meaning we've got a sell signal that could very well go to a sell mode. For the sell mode, I really should wait to put the down arrow until the stochastic breaks under 88%. In fact, I'm going to hold off doing anything. I want to see the stochastic break under 80% for me to actually be able to get a sell mode signal in the weekly chart. That's got nothing to do with our positions. Based on our positions, we went short right here, the Dow, on the 19th of July. Why? Because we made a peak D, and it looked as if the stochastic was starting to decline a little bit. MACD was still very strong, but D and E is where we start to look at the short side in my methodology. You don't have to go short, but we did. But we got short just 1-to-1, not 2-to-1 or 3-to-1, meaning I could give it a much bigger flexibility on the upside, and I allowed that. We weren't even close to being taken out. When it went to 15,658 on the second, that's when I got leg F and a peak F the next day. We went short the next day on the S&P. When the Qs, we waited. When the Qs went to that leg D, remember I had to wait for a move to 77.09. Then comes Icon and discusses Apple and his position and all blah, blah, blah. There's a spike up. Well, same methodology. I have no idea if it's going to be right or wrong, but we went short the Qs because that was the technique that I used. Then you look at the weekly chart, and the only way I can count this is to say that it broke above that up channel, what I call the inside track, Chapman Wave inside track sell zone. It broke above it, but that's formidable resistance. And it takes time very often. If you don't step right out of it, it takes time to build strength to work your way through. Remember, bonds did that after 25 or 27-year up channel. Finally broke out above it. Now it's back in that channel. And in fact, bonds today are, the TLT's up 7 at 103.80, but bonds were down as the chart was showing a little earlier. So this is going to be very, very interesting. In the weekly chart, oh, let me move that away. Close. Oh, man, that's interesting. All right, in the weekly chart, I've got an F/B. I don't want to make it complicated for those of you who are new, but let me just, it suffice to say that if it becomes an F, a peak F, that usually denotes time and price to the downside, a pretty serious pullback. But I'm going to hold off. I've got a parallel wave count. The stochastic's at 93% and the MACD is still very good. I don't want to really do anything just yet until, in terms of putting, all I can do here is say there's a possible plus sign or even a down arrow. I'm not going to do anything. I don't need to. It's above the 9-period moving average of 74.85. It is the stochastic and MACD are still strong. So I just did this as a perfunctory thing in the Qs because that's what we do when the technicals are weak in the daily. And we will see if there's going to be residual strength that is maintained in the Qs, thereby making this a bifurcated market, a market that has certain indexes that are actually quite weak if you look at the majority of shares, but the weighting of Apple is so strong that it is really helping the Qs to hold up. If you look at all the others, and it's leg E, I've got another way to counter, but leg E in the monthly chart, I have to take a potential pullback here quite seriously, even though I haven't got all the indications, because the monthly charts in D in the Dow and D in the S&P tell me that's where you normally would get a pretty good pullback. I'm calling it a pullback. I'm not calling it a major move in the monthly. I'm just saying we're starting off with a sell signal. Now, here's the issue. The IWM, which is the Russell 2000 iShares based on my work, has gone to a leg E, with the MACD still very strong in the monthly chart. Stochastic is just turning down at 91%. The on-balance volume says, be careful, and relative strength says, be careful. That's all it says, but that's all I can do. But here's the thing. It's a potential peak E in the weekly chart, especially if by the end of the day, I don't think it will, but if by the end of the day, the IWM closes underneath 101.95, that's 50 cents from here, that would say we have a pretty sharp sell-off towards the close, and I'm just not sure that that's the market's going to do that. It would have done it already, so I think it's just in this trading range right now. We're going to watch that closely, but it's the daily chart that has made it peak F top at 105.63. I'm not sure why I've got it twice. 105.63, going once, going twice. No, it's only once. Get rid of that one, and that's a peak. That is a sell signal that is decidedly in a sell mode. It has tested the gap, that very big gap of the 11th of July. That's the one that if it starts to break down and it closes underneath 101.38, we'll say, okay, now the weekly chart is probably ready to pull back. I'll be back. Basil Chapman, Tiger Technicians Hour, and the Dow is just up a tad, and S&P's unch. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman here. Now, let's go on. We're looking at the IWM. The IWM, being the Russell 2000, was the one that let's see, right on the 5th. It turned around a couple of days later than the S&P and the Dow that made their tops on the 2nd of August in a little delay mode. But what's most important about this is that the monthly chart has really accelerated from the 75s back in November, was it? Yeah, November of last year, to go in, what is this, 8 months or something like that, 7-8 months, to go all the way to 105.63. So just based on that alone, says, you know what, a timeout is not a big thing. It just needs a timeout. And it might be price, and it might be time, or it might be a combination at different times, or we might see a continued waterfall decline over the next week. As just, things were looking so great a week ago. And that's when I said, this is where you've got to be most careful when everything looks just fine. So we might find that, in fact, those people waiting for a bounce to short because they missed it before, because you remember the news came out and everybody was just, what was it, a couple of days ago, it felt like, oh my goodness, I was wrong being short because of the opening. Everyone was talking so bullishly. I thought, wait a minute, I'm looking at my chart, it's negative. Everybody's so bullish. And now we're pulling back. So we might be looking at speed to the downside. So how we come down is a factor of momentum. Is it slow momentum or is it in fact something that is going to be a series of lower highs and lower lows? I am completely wrong, as I might be in this particular stock that we shorted. Look, we went short based on the technique that I used, Chapman Wave methodology of that peak D, where you got to look at your technicals. Zillow, just a fantastic stock, soared from the 20s at the end of 2012 to 97.29 just recently. At the top, it had a Chapman Wave 2-bar reversal, a possible Chapman Wave 2-bar reversal. At the same time, it also made a round number. 97.29 was the high. But the very first day, the very first high of this month was 97, 29 cents lower, round number. So we shorted it. We shorted it at 91.81. We had tried it before, the day a day before, I think it was, yeah, at 91.98, lost 2.10. It's not even 2%, it's 1.8% or something on a very small position, and then did it again yesterday. And what happened is it didn't give it to us, and then suddenly it popped up to 92. We wanted to short it at 98. It goes to round number 92 and closes down at the 88 level. Now it's taking us out because I wasn't prepared. This is such a, I mean, this is a newsy stock, and there are a lot of people wanting to buy it. I didn't want to have any risk at all, so I lowered the stop, so we made a 1-point profit, so now we're down $1.10. But this is the process that I'm going through. I'm looking at these stocks and I'm saying, wait a minute, this is still very weak. The technicals today are way weaker than it was when it was making a high back on the 8th of August at 90.50, and then went to that big spike the next day to 97.29. So that's the way I want to go about this, step by step. I'm not afraid to go to the top, to the best winners. We've got one sector that we shorted on the top tick of its multi-year run to the upside. I have no idea whether that's going to be taken out or not, but all my technicals said get into that on the short side, because every one of those stocks, just about every one of the stocks, looked highly vulnerable. Hey, here's another one that we're looking at. Go to the biotechs, BIIB, made a head and shoulders top in the daily at peak E. It made a doji, beautiful, I love these kind of doji candles. This is what I call a long-legged doji, which says, this is really not a very big long-legged doji, but it's long-legged enough. So it makes 242.64 BIIB. This is Biogen IDEC, and it goes, a biopharma, goes to the high, 242.64, gaps down the next day, and most importantly, it goes all the way down. In fact, this is typical of this kind of pattern. Goes down to 194. That is 50 points. Then it goes running up, and it goes to 234.74. Where was the doji candle midpoint? 237. So it goes to 237. It goes to 234. It misses it by 2 points, but it goes all the way back from being down at the 195 area. So that candle is like a magnet very often. And now it's pulling back, and my guess is this thing is going to go, and it's going to test 194.66 again for that H pattern. I'll be back. Basil Chapman, Tiger Conditions Hour. We're looking at an overview of key stocks and key sectors, and I'll be right back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Basil Chapman, we're back. So this is what I want to look at. Here we go. BIIB, Biogen IDEC, Biopharma, had a very sharp pullback from the 234.73 high, making an H pattern in the weekly chart. Monthly chart, at this point, I'm still going with a peak F. It could be an alternate count, but I don't need to do anything yet because the stochastic's at 82%, turning down, but still good. MACD's just flattening out and about to turn down. So I don't have to worry about that. It's the daily and weekly that are very important. It breaks out. If at any point in the next 2 weeks it breaks above 225, it shouldn't be such a big deal for it because it moves so quickly and with such big movements when it does a trend change. If you go to Gilead, G-I-L-D, Gilead Pharma, the exact title is Gilead Sciences, has also a potential for a peak F in the monthly. But I'm just going to leave that for now because it could have recycled up. This could be as F/C. I don't have to do that right now. I'm just saying that's what you got to be careful of. But you go from the daily to the weekly. Well, the weekly is... I'm calling this a peak F. I have no reason why not to. It's got the very quick rally in the stochastic up above 80% and then back down again. The MACD's turning down. I suspect that I will very soon have a confirmation that Gilead, G-I-L-D, is the symbol, is in fact turning down. And let me just see if I actually wrote in anything. Oh, it had a split. That's why. Oh, when stock split. Look, there was the peak F top way back somewhere at 57.63. But that was 57.63 before the split. I love when I've kept the old notation there, because what this says is it's doubled. It's more than doubled. It hit a high of 64. Right now, it is at the same level it was pre-split back in August of 2008. 2008. Yes, 5 years ago. Isn't that incredible? So I think it needs a timeout, and this weekly chart, so this could be, all of these could be hat trick tops. Daily, weekly, you start off with the daily because the monthly says a possible peak F. Then you look at the weekly, and if you get your sell signal in the daily at 64.04 with the next day being lower at 62.82, that's what you're looking for, and that's confirmation. And where was the round number? On the third session, 62 on the 30th. And 62 says that at any point, if it breaks 62 on the upside, this thing's going even higher to retest the old highs. Just make it as simple as that. What about Regeneron, ERGN, Regeneron Pharmaceuticals? Well, wait a minute. That made a peak D with a beautiful doji high, with two round numbers the day before the high of 282.27 on the 22nd of July. Day before, it happens to open at it has a 275 high and a 264 round number low. And then kaplop, it comes down with a little doji candle. Could turn out to be a halfway marker, but maybe there's a little bit of a bounce next week. At 233 right now. 245 is the big resistance that you got to watch. There's that double top, the Groucho Marx C1, C2 top. Got to be careful there. And that says it only becomes a really bearish signal if it takes out the low, in this case 206.30 over the next 2 months, without trying to rebound to the 250, 245, 255 area. So there's another one that maybe he's making a hat trick top peak D already in the monthly chart. Wait a minute. Celgene. You remember Celgene? Everybody loves Celgene. Peak F doji top with the silent doji candle just around there. And you've got 149.92 CELG. Peak D top. I'm calling it peak D top because that's the only count that I can have. And monthly chart is a G/C. So that says, hey, this one could still hold out quite well and make a new high. But watch the daily, because if the daily fills the gap and goes underneath that 125.28 high of the 10th of July, then there's a really good chance that the weekly chart is going to make a potential left side shoulder. This is the head. A pullback, a bounce back to the 133, 135 area. So it's a sloping right side head and shoulder, and then the H pattern, and then it comes down without making a new high. I'd be very careful. If you look at the IBB, which is the iShares Nasdaq Biotechnology, I should mention that we are short. What you would look at is there was a round number right. So it makes a high of 201.19 on the, what is that? That is the second. On the 5th, it opens at 201, round number, goes to 201.47, and kaplop, it starts down. And that 9-period moving average in the daily was just unbelievable support, is now going to be resistance. It's trading at 189. If it bounces, it can go to 192, 194. But then I suspect it's going to make the H pattern come down. Why? Because the weekly chart, everything about it to me says the weekly chart is probably in a leg, a peak F. If there's no new high bar this week, well, it's trading at 189.08. I just don't, I might be wrong, but I just don't get the feeling that it's going to trade at 201.48 by the end of the day. So this is going to be a peak F/B. I'm going to hold off calling it a peak F just for right now for two reasons. One is I need to see how it closes at 4 o'clock. If it closes under the 9-period EMA, that'll be a warning of the first time it's done that since the big break to the upside back on the week of the 28th of June. That's nothing, because since the week of the 4th of January of this year, when it went to 143.26, that's the only time it's closed under the 9 EMA. And then it went to a high. It had, in fact, a 1-to-1 breakout from the low, past the 186.98 peak E high, So I'm watching this carefully, but it's the monthly shares. Here again, that could be, in fact, leg F. So you can see when I'm putting the whole thing together, I'm saying, there are so many fantastic sectors, stocks in the sector that are just amazing, but the whole sector's had just a beautiful run. That says in time, there should be some kind of a digestive period. It says in time, maybe it's more than a digestive period if certain parameters are hit. For instance, I wouldn't even think of calling the monthly sell signal until it closed decisively under the 170 level, which is the 9-period moving average. So I'll have to go step by step. Going step by step is one of the reasons why we still have a stock since April that is up 100%. Or it was up 100%. It's up maybe 97% right now. And we've taken a little bit of profits. We took half off. Now we've taken just a tiny little bit more. Still at the core position, which I really want to add to on a pullback. Those using the time frames is really important. Now look at this. You've got Alexion, ALXN. This is a strange one because it's gone to a potential peak E in the monthly, and I'm pretty sure this is going to be a peak E in the monthly. Alexion Pharmaceuticals, ALXN, at 105.44 right now. So it goes to a high, way up at 125.65, and now so it gaps down for the first day of the month, and it's trading. Well, no, it's got a there's a big distance between the high of this month at 118.40 and the high of last month of 125.65. So now this is the interesting thing. I've got leg D, a second leg D, peak D that is, in the weekly, and the technicals are very poor. Stochastics is 68%. This is going down. But here's the interesting thing. It made an all-time high. There's no other way I can count it. In leg C, well, in the daily, I believe very strongly that the big tide, the tide that essentially gives you the big picture, is in the monthlies. And the monthly for me says that this tide is going down. The weekly is about to confirm it. So that says, okay, that's one example you can put into your book as an all-time high in the daily that failed at a peak C. And that has to be news-related as far as I'm concerned. In fact, if that never went that high, then this would have been D. But that's the way it is. That's the chart you're going to follow. So I'm watching this closely. 98 would be the major support for Alexion. So if you go through these different stocks, look at this GE in my Dow Quartet. In my Dow Quartet, GE, IBM, Triple M, and UTX, GE has gone down in a very orderly way. I actually like very much orderly ways. We were long. We took a profit in GE. I'm looking at the weekly chart and I'm saying I've got a G/C. It certainly could go to D, but before it does that, it seems to me that everything about the chart pattern I'm looking at, not the monthly, I'm talking about the daily and the weekly, says some type of consolidation is unfolding. It's very orderly. I like that. And there was a big gap up on news, so the whole orderly decline is based on the gap from the 23.94 high of the 18th of July to the next day, where there was earnings, and they also said buyback, I think it was, something like that, going to 24.95 on the 19th. If that day didn't occur, then all of these patterns would have been going lower. You would have been testing 22.76. So sometimes an accident or fate can get you to a peak D or E. So many stocks gapped up over the last 3 weeks, 4 weeks, to highs on news-related events that turned out to be D or E or F. Even Tesla, look at this, TSLA. I'll get back to GE and IBM, etc. Had this double doji top, almost an island reversal. It was at peak D at 145.73. Out comes earnings and blah, blah, blah. It goes to 157.86, big spike. Long-legged doji says it's got to be retested. So the next day it has a doji, tests it, and then it gaps down. And then what happens? It goes to 135, round number, trying to rally, but it's peak E in the weekly chart, leg E in the monthly chart. I believe that Tesla's going to be coming down, and all it has to do is break that little gap high of 130.68 at any point in the next 2 weeks, and that'll tell me that the 127.45 9-period exponential moving average in the weekly chart is being broken, and that's going to be a peak E, and then there's going to be a digestive period, and that is the Roman candle, Chapman wave Roman candle in Tesla, TSLA, trading at 142.17 up 250 right now. The weekly candle of the 19th of July, if it gets into anywhere in the 112 area at any point in the next couple of months, it's going to retest the low of 104.50. So we can go step by step. Where am I wrong? I'm wrong if Tesla spikes and it touches once again the candle wick close of 153.48 of the 8th of August. If it does that, it could actually make a new recovery high. I don't see that. I think Tesla's made its top. All the news is out. There's not much else that can go. I think Tesla's coming down. Is it a short? I would say yes, but for me, I want something else to happen to be able to get the safety that I would want before I short it. I wouldn't be afraid to short it, but I would want something else to happen. Now, let's go to IBM. IBM, of course, is one of the weakest Dow stocks of the Bs. That pattern that we've been looking at for so long, that triple top going to a G/C, that's breaking down. The technicals are horrible in the monthly chart. Technicals in the weekly chart have already dragged down, so the stochastics at 22%. I believe it's going to go to the teens, so that says IBM should go lower. It's turned the daily 200-period moving average. It's almost a joke because it spiked up there once back on the 18th of July, and that doji candle, you see that wick? The guy kept trying to test that wick, and then whoop, it breaks down and continues on its merry way down. So IBM, to me, says lower prices are coming. Well, that's 2 out of the Dow stocks that are not acting all that well. You've got Triple M, which was fantastic. Is it still fantastic? Well, look what happened. It made a peak D at 119.29 in the daily. The technicals are failing. It tried to rebound to make a new recovery high. It made that cup formation 119 high. 119.20 high. It was 119 here. Where was the 119? 119 high on the 8th, yes. There is 119 round number high, and it's trading at 115.90 right now, up 5 cents. The daily is in sell mode. The weekly had a peak C1, C2. Now, this is a little fuzzy. I don't like to do this. I really should call it a G and be satisfied. It's a G/C. But why do I have time here before I can make my decision? Because the stochastics are 92% and the MACD is still good. But it's the monthly chart that says to me, wow, if this is a leg E in one of the best Dow stocks, multinational conglomerate, Triple M, 3M, touching the inside track resistance, which said last time it went to an E, pulled back for 1 month and then went to an F, or 2 months and then went to an F, slightly higher to 98.19. It says right here I've got to be a little bit careful. So now we've got Triple M, daily, short-term sell mode. Weekly says you got to wait for more evidence, but it has made a potential peak C top or G top. Just going to have to wait at least 2 weeks before you know. But here's the other one, UTX, very key. This is my Dow lead indicator stock. Made 107.86 high in the daily. The weekly, I believe, is a peak F, monthly leg D. So we'll continue along this path straight after these messages, and I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Yes, just a real quick thing. I had 2 questions. One is AMRN, and yes, a very nice. It needs to hold the 560s. I would have a target of the $7 to $7.20s if you're long. It's acting quite well for a change, but it has to hold. It cannot fail again. Now, UNP was the next question. Union Pacific Corporation. Rails, the question was, well, what do I think? Well, I'm looking at the IYT. I'm another reason why I'm concerned. If you look at the IYT peak F top in the Chapman wave at 119.45 of the iShares Dow Jones Transportation average, the weekly has made a peak E, and it's starting to fail. The technicals are really, the MACD is turning down. The stochastics at 83%, but turning down. The monthly chart is still really good. I suspect that this is part of the whole consolidation that's going on right now, and that the IYT could pull back. The big test is 110 to 109 area. If it fails that, then there's a real good chance it makes an H pattern, an arch pattern that comes back down to the 106.32. Absolutely, if the IYT in the next 3 to 7 days, trading sessions, breaks above 116.93, that'll be real good. Now, here's the thing that I'm looking at. If I can just find it. Years ago, I was sent something by someone who said, follow UNP. Where UNP goes, the S&P goes. I thought, oh, come on. Well, look at this. Here's the chart. There's UNP. It's made its top in the weekly. And there's the SPY. It's made its top in the weekly. It also turns out GE has made its top in the weekly. These are all-time highs for all 3 of them. All-time high for the Dow Diamonds right there. The Qs weekly made, this is all-time, not all-time high, but 5-year high, whatever it is. And the IYM is lagging. It has not made. That's the IYM is the IYM is the materials. Yeah. So we've got to watch this real closely. And that's the one chart. So I don't agree about, the question was, would you be long or short? And my answer would be, I would be looking to short UNP. But let me just go to this particular issue right now. If you are looking at these different charts, look, the volatility index in the daily has gone to peak B. If there's no new high bar today above 1485, you've got to be careful because that looks like it wants to go to a C and a D. On the other hand, you've got a peak F round number 29 in the XIV, which is the inversion of the VIX, the volatility index. Lo and behold, look what we look at what we got. We've got a peak, a trough B. But it looks to me like it really wants to come down. The XIV wants to come down to 26.29. It's trading at 27.33. That's that. If you look at the yields, the yields have gone to leg D. It seems to me there's a chance that bonds could finally have a little bit of a rally to make a peak D next week with no new high in the yields above 38.37 in the 30-year yield. That's the white one. That's the 10-year. That's the 5-year. Hey, wouldn't that be something if bond money comes back to bonds as a safety haven? That'll come into bonds out of stocks. Wait a minute, wood, which is the iShares Global Timber and Forestry ETF, WOOD, trading at 47.64. There's the H pattern I've been looking at for a long time. I don't know if it's going to work, but if it breaks under 45.50, yes, it's starting to work. And there's the home builders. Nice day today. This is leg B to the downside after peak F. I'm watching those home builders really closely because they might give a nice bounce. There's the dollar, the UUP, holding support. The dollar needs to rally if there's going to be a further pullback. That's normally what would happen. But gold is acting very well. So I won't have time to talk about gold right now. I'll give parameters in a moment. But there's a potential peak F in the weekly chart of the SPY. And there's the TLT making a leg C. I think that could be, in fact, a D. So, parameters to watch. Let me just quickly do the GLD, and I'm going to tell you for next week what to watch for. I'll be on vacation next week. I'm not sure if I'm going to do the show. Some of them will be archived that I've been preparing. So, this is probably leg E/B in the gold chart. The gold is looking very nice. My target is 138 over the coming week or so in the GLD. And have a great week, and I'll be back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.